All right, good morning, everybody. Got a bit of a gap up to start the week. I just saw the AM edition of the Founder's Note, so I'm getting that shared real quick. All right, so we're still looking for a change to market structure, which we started to see a little bit of that going into the close on Friday. The Bitcoin push that started Friday morning continued over the weekend with some talk from Trump that kind of assisted with the push. One of the things you want to keep your eye on is when you're looking at sector rotation, the outperformance of one sector versus another one, depending on if you're using FinViz or something else, it might be labeled consumer defensive versus consumer cyclical, or it might be consumer discretionary versus consumer staples. So you can do that with a ratio. You can chart it different ways. On FinViz, they have these groups, just looking at 1 day, 1 week, 1 month. We've still got consumer defensives leading, but consumer cyclical is trying to come back up again. You want those two to change places. We need the consumer discretionary or consumer cyclical to be leading. Green on the screen around the world. This Japan number is wrong. They were up today. I don't know. It's what you get with a free website. So, always check the data. The rest of these seem more in line. We got US manufacturing PMI, ISM manufacturing, and auto sales. If you look at auto sales, take Tesla for an example. When we got the December data in January, we had a couple of days of weakness. And when we got January's data in February, we had a couple of days of weakness. And we broke through that quarterly structure. We've been underneath it. We'll see what comes out of this today, but if the numbers aren't good for Tesla, then I think we're looking to go back to the anchored VWAP from January. That put us back down around call it 230 for an easy round number. We got some auctions today, the Fed chipping teeth, and then tonight, Japan 10-year bond. Kind of a big deal. Everybody's expecting this to really be nothing, right? Just continuation of the same old, no big deal. But the spread is getting wider, and we may see something here, right? So it's just maybe shop around for some really cheap lottos, right? Some YOLO 2 penny, 5 penny puts in the S&P, the NASDAQ, whatever, in case something comes out of that. I don't think much have changed on this, but got to keep it updated. All right, we're working through the zero gamma, still have volatility trigger overhead, put wall still where it was. We got the 10-day moving average just above us at 6005. If we can get through that, then we've got the 10-week and the 20-day with the call wall way out at 6200. The AM edition came out right before I started, so I haven't had a chance to read it yet, but I would say look in there for anything that talks about this call wall. Otherwise, we got a lot of resistance, all those moving averages tangling up, the 10-week, the 10-day, the 20-day, and the 3-week, which is what looks like we just hit it. Close enough. Big round number, 6,000. The yesterday 111 happened last night. Then we retested it a couple times overnight. Now we've had a breakout into the 1236. So if we can get through that, then we're looking at a pretty decent start to the week. Take last week's range, 59.57 is the midpoint. We opened above that. All we have to do is keep it, which sounds pretty easy now that we're close to 6,000. But the week, it's just getting started. When we come back to the daily, you can see the defense that they were putting in across this high. 59.92 is really where it starts, and we're right into that now. So we got to find out if there's still a lot of sellers sitting here, and we won't know that until we run into it. You can likely see it in Bookmap or Jigsaw. It'll be on the dome. We're opening up above the weekly floor pivot, and the channel is so narrow on the week that we can't even see a channel. That implies on a weekly basis that we can break out on the weekly, and that the breakout can grow legs and we could really run. Now, that's a weekly point of view, which means we would be looking to see we're right in the middle of the week from last week. If we take that at its word, we would need price to run all the way up to 60, 67, break out from there and continue to run, or the other way around, 58.50, break down from there and continue to run. That's a long way, whichever direction you want to take it. We have an MDP this morning. That's a missed daily pivot, which is at 59.22. Markets generally hit their pivot 80% of the time. So another way to think of it is we have an 80% chance that we will hit this floor pivot today. That's what the statistics say. I would say we have a much smaller chance of hitting it than that. We would have to break back down inside of Friday's range, get through the weekly pivot, which we tried to do twice last night, and we weren't able to get it done and keep it. Then get inside the channel and then hit the floor pivot. That's a lot of work. So news could do that, absolutely. Some headline could come out, break us down, and we could get through all of that. But it would take news to do it. I don't think the market's got the structure on its own to be able to make that move, which will set us up tomorrow with our first count of MDP. It doesn't count today, it counts tomorrow. We almost had one on Friday. I guess it just depends on where you start counting at. Well, no, we hit it at 3:30. I thought it was at 4:10, but so there we go. We hit it on Friday, just really late in the day. This may seem like a really good bullish start, but I got to say, all things considered, I would rather gap down on a Monday than gap up on a Monday. Having said that, though, we are gapping up from a low area, and we're not gapping up, after running into all-time highs. So I guess you just have to kind of take it into context. I don't like a gapped up Monday. But we'll see. This isn't bad, all things considered, because of the drop. Some previous examples of a gapped up Monday start the week, especially after a decline. Those didn't turn out bad either. $6,005, call it 6006, is the upper ADR half, and we got close. And this isn't a game of perfect. It may count that as being hit. Just remember, when the SPX opens, it's going to be in the middle of those two ADRs. No matter how gapped up we are, the SPX won't open at those levels or beyond those levels, because the lines will be drawn at 9:30 when it does open, which means we could continue to run in the same direction while the SPX seeks out its ADR for the day. If we continue to push to the upside, we got Thursday's high as our next area of resistance. Then we focus on 6044, which is the full ADR. If we get to one side early enough in the day, we can go to the other half by the end of the day. I know this may seem like the day is still young, but the day is half done, right? So when we say hitting it early enough in the day is half over. So just kind of keep that in mind. Doesn't mean that we can't go to the other side. And even if we do, it wouldn't be bearish to do that. The low that we set on Friday would not be challenged by a pullback to this lower ADR. It would just be setting higher highs and higher lows, which is exactly what we need to do, because it's how we got down here. Lower highs and lower lows all the way down. Now we got to run it the other direction back up. Higher highs and higher lows. Kind of a double distribution last week. We are back through the point of control 59.63. Kind of want to keep that. It's a perspective on the week, so it's not something we expect to hit anyways. But if we do get weak, move to the downside, testing 59.63 is okay. We could even wick under it, but we don't want to see closes underneath that on the week. $10-day, 30-minute volume profile. We're getting into that volume that we've been eyeballing across the top. It's very likely that when it moves, it will show up down there at the 59.63 area. We're hoping to stay above that so that when it does get brought down to that level, it will be supportive and we won't be underneath it. If we're underneath it, it won't be support, it'll be resistance that we'll have to work through. So staying above 59.63 has a lot of merit to it, has a lot of weight behind it. We want to keep that level. This point of control is going to move. It won't continue to be over our head. And as we run up, we don't want it to be there when we get there. All right, Friday we hit that VPOC from Thursday. That's what we rejected off of going into the close. It's done now. We'll just take that line and use it because Friday we built a new VPOC. $58.78. So any move to the downside, we've got to take that off the table. We still have one overhead, 60.33. The cog line too. We're seeing a little bit of different defense here. It's just getting started. There's not much to it yet, but it matches what we were talking about earlier from that daily chart. And I pointed out that the last two times we've been around that 6,000 area, we've seen defense, a bunch of sellers sitting there, and it took us back down. We're seeing a little bit of that this morning. On Friday, we evaluated next week's range, and it was a little bigger than the previous week. Still is. What we seen on Friday morning held into Friday's close. Now the lines are set. They won't move again. And you can see that we've got more volatility priced in this week than we did last week. That can be for a number of things. I don't think it's strictly from economic events. Generally, when we have those, we see a narrower range because they are volatility suppressing, like FOMC, that sort of stuff. It suppresses volatility going into the event. So this is likely tied to, the tariff talk, the Ukraine, the way things ended with Zelensky and Trump last week. Could be any of those plus some, right? We got definitely a lot of bricks in the wall of worry. But I don't see the wider range this week based on economic events because that's not how this thing generally works. As I mentioned last week, we were on our way back up towards the zero line. Base case that we get there, we overshoot it, and then that gets us back in the zone on the upper edge that we've been playing through most of the year since we got really into January. But it went back to first week of December. We need to break that like we did mid-January, get above that half and keep it. We haven't been able to do that for a while. But one step at a time, get to zero, get above the 10-day, then get above 0.5% above the 10-day. On the week, we're still below. Got to get above the 10-week, start pushing our way to the upside. We've been setting lower highs since November in this thing. So how far away we get from the 10-week has been declining. And we can see that in the blue line too, really going back into March of last year where we topped out. And it's just been less and less since then, right? So They talk about the bullish exuberance in this big tech bubble, blah, 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 and how it was overcrowded trade. Everybody's all piling into risk. Well, it's been getting less and less since last year. One step at a time. Let's get back above the 10-week. Then focus on 1% above the 10-week. So we got the VIX down. It's really about all we have. Things that are up. Bitcoin, gold miners, gold, uranium, growth, Mag 7 chips, consumer discretionary, more China, more tech, and banking. Perfect. We have that too. So we got every piece that we would want. We could, if we wanted to get greedy, we could ask for a little more, like maybe cloud computing being up more than a half. But it's up, it's moving in the right direction. And this ETF doesn't usually get a lot of morning flow. It does better after the open. When we think about what we need for, a trend day, kind of come back to the sectors. The bottom three, defense, top three, offense, or risk on. If we're going to have a rally day in the S&P and the NASDAQ, we can sometimes spot that in the pre-market if the rally today isn't based solely in options, because we can't see the options before the market opens. So in the pre-market, one of the things we want to look for when we're trying to consider if today can be a rally day is which sectors are up, which ones are dominant. Tech and consumer discretionary are the biggest ones, but getting help from finance makes it to where we have all three of the risk on sectors. Now, tech is generic. We can swap that out with like chips, communications, cloud computing, software as a service. We can get more nuanced, but generically speaking, tech and consumer discretionary. So we've got all three of these up this morning, at least 0.5%. And that's what we would want to see for a rally day. Just keep in mind, news can break that, right? Doesn't matter how good we're doing in the pre-market, news can break it. All right, airlines are still down. This has been a good play so far. It doesn't look like it's done. And it shouldn't be affected by any sort of capital rotation, right? We kind of started that out with a sector rotation this morning. Say we do get, this sector rotation from growth to value back in the other direction. I don't think the airlines are going to partake in that. They've got their own problems. We also got solar down this morning, bonds, the VIX, the dollar, and healthcare. That Bitcoin really took off on some tweets, which, that's not sustainable on its own. Just talking good about federal changes to Bitcoin guidelines, blah, 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 doing a strategic fund in Bitcoin. It's all hype, right? They could say whatever they want, but promises. So watch the Bitcoin thing close. See if it starts to spread out into its proxies. Things like Mara, Hut, Hive, Coin, Riot, Hood. Otherwise, if the proxies don't come up with it, then the market's not believing the promises or the hype. Still, as a reflection of risk assets, we want to see this up if we're thinking the market is willing to step back into a risk on bias. Silver up, precious metals. We're back above the year-to-date anchored VWAP. We had a significant fall, right? 5-6 days. So we're due a little bit of a bounce. Whether or not this is just a dead cat bounce or we're gonna, make our way back up, time will tell. I would say mark the halfway point between those two. If it gets above the half and closes above it, probably want to rethink your shorts. Pot stocks are up, but those have just been bleeding like they were some leveraged fund or something, right? It's like one of those triple short funds. All that thing does is bleed. So it's not real exciting. Gold miners, uranium. With uranium, it seems to do better when we have those SMRs also participating. Maybe like OKLO and those guys. China group. So the China ADRs, Baba, Baidu, JD, PDD. Even with all the talk about tariffs and everything else, seeing this up kind of fits in the eye of those tariffs. China's got this big meeting coming up too. So they've got an opportunity to generate waves and cause headlines, which is it's stimulus even from just a talking point, right? Like the tweets about Bitcoin, it was just vocal stimulus, but it was still stimulus. It popped Bitcoin up. They can do that China meeting next week and just talk good game, and that'll provide some short-term stimulus. But I think people are looking for more than that. We'll see, but it's up. It's a good start. And IWM is outperforming the Qs this morning, so small caps are doing better. I think it's not the time for a short covering rally or any sort of factor rotation, but never hurts to look at the shortest, most heavily shorted names to see if we're going to get into a little bit of a short squeeze. That would just be one more bullish bullet to add to the cannon, I guess. But we would have to dig into that after the after the open anyways. So good start. Keep your eye on the clock. Watch the news. We've got tariffs looming, and a lot of the market seems to think that he's going to walk it back because there'll be some agreements or some concessions, or who knows, right? If it gets walked back, then one of the proposals was he would walk it back if Canada and Mexico joined him on tariffs against China. Well, if they do that, watch that K-Web constituent with Baba, Baidu, all those, because it'll take a gut punch to the downside. Just a heads up, right? That's kind of watch the headlines. Keep your eye on the clock. I'll see you guys tomorrow.